G'day everyone, welcome back to Pete's Investing. It's August 25th, 2023. This is the US crude oil price update. On the daily chart, first off, you can see here it's hit the resistance at 84.40. It's retraced back and currently sitting on this minor support at 77.56. Now that happens to be the 38% retracement level of this Fibonacci range. And it's still overall bullish, but you'll notice the CCI is falling off. Likewise, the Stochastic has fallen off. Let me just expand that Stochastic for you. You can see there it was approaching, this is the midpoint, it was approaching the midpoint, but it's fallen off and dropped below its moving average. So that's also weakening, so possibly we may see further declines from where we are at the moment. However, there's still chance of a bit of a retrace to the upside, and the reason I say that is if we go to the hourly chart, first off, this is just zooming in, you can see there that's that same resistance level. It broke down from there. What I've done here for those new to the channel, I've got some these little squares, and each of these are little target areas. So they're basically divergence targets. So you can see there was a bearish divergence versus the price. It fell back, hit our target. There's a very minor bullish divergence on that CCI. Broke up, hit a little target there. Another bearish divergence here, dropped, hit our target, and so on. Now, where we are at the moment, we've got another divergence forming, and this is the bullish divergence here on the CCI. I've already drawn out all the parameters to potentially enter and in a target area. So you can see there bullish divergence on the CCI versus a bearish divergence on those bottoms of those candles, of those wicks of those candles, I should say. And that happens to be our minor support at 77.56. I've also drawn this descending diagonal trend line between, it's hard to see there, between those highs there within that Fibonacci range, along those tops there as well, and cut through those candles there. That just gives us a bit of an indication. You can see there it's touched that line and it's currently resting near that descending line. So for this divergence to work, we need to see the CCI continue to the upside and the price also to break up. And our short-term target, I always like taking a short-term but very close target. I don't like getting too ambitious. The closest target would be probably that 50% to the 61% level as a target area. Let me just draw that as well, so we can document it if it hits it. So between the 50% level and that 61% level. So that'll be our target area to hit that if it breaks above this descending trend line. Now, if it does break above that 61%, we're going to see further upside. That's what that 61% is always a key area to look out for. Now, alternatively, if it does break to the downside, then we need, and for this divergence to fail, we need to see the CCI break below this point, at that level there, break down there somewhere, and by then we'll see the price also collapse and break below this minor support area as well, in which case we'll see further declines. We won't project anything there at the moment. We'll just see how it goes with the coming hours and see if this bullish divergence plays out or not. I'll keep you up to date. So to understand how to trade using some divergence or even trend trading strategies, support us and subscribe to the Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Thanks for watching.